Hello everyone, welcome to Smart Investing. I'm Albert, host of the channel. So it is March 11th, 11:49 p.m. East Coast. It is Friday. Looking forward to the weekend. I know everybody else is. The markets are actually open and I'm off today, so I thought I'd actually do and show some live feedback on the stock market as of today. So I'm gonna be doing the banking services sector, so that's really the main goal here. I have here 10 stocks. So before I begin, I'm going to show you guys the stock market. We have Dow Jones, S&P 500, and the Nasdaq. So overall, we have here decliners. Over here, we have advancers. So basically, green is good, red is bad, as if you want to say it that way or think of it that way. So green is up, red is down. That's what pretty much it is. It's self-explanatory. Can't get any more simple than that. So again, I'm using Webull. I love the accuracy on Webull. I don't know what I'll do without Webull. It's just like the best app ever. And I've been using this app since day one. So any updates that they do on this app, I'll understand it because I've seen and know every little thing on this app and the changes and stuff. So I'll be familiar with any little thing that goes to a change. So we have here the number 4,000. So it looks like it's declining since that number is beating. This number is beating this one. So that one is greater than that number. But again, that can change any minute. But as we can see here, usually each index, Dow Jones, S&P 500, they all follow the same pattern. So as we can see here, let's deep dive into it a little bit more. So we can see here, it kind of went from, this started in the morning, so it kind of went up, flat, and kind of went down, flat, went up again. Now it's starting to go down. This is the Dow Jones. So we have here S&P 500. Hold on. It's a 5-day, so let me see. So yeah, Dow Jones went up and then it kind of, it's kind of going up and down. You see how it's going green and red. It's like fighting over the price, like always. This is a clear downtrend. You can easily see here, S&P 500 went down, up a little bit, then it's going down right now. As you can see here, it's almost 12 o'clock. Whoops. Oh, let me put it on Do Not Disturb and Battery Saver. I definitely need that. My app, let me start up the app again so I won't experience any difficulties. So again, S&P 500 clearly going down. And then we have the Nasdaq clearly going down. 2 out of the 3 indexes that have a clear direction. So 2 out of the 3 votes. That confirms the downtrend. So I just wanted to show you that real quick. And let's begin with our sector for the banking services. So again, I have here about 10 stocks. So let me count them actually. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So 10. We're going to start from the bottom and work our way to the top. So let's begin. We have TFSL. As of right now, it's going down. I'm not really looking at that. But let's see the numbers that they have here. Supposedly, this stock is going down for the year. Wow, since May. So first reaction, I saw the 1 year is going down, support and resistance. It's been going down, definitely confirms it. So let's see some estimates. So net income, revenue, the debt, obviously that's typical debt for the banks. Let's see what location. It says Cleveland, so that's in Ohio, so that's like the Northeast, or it could be Central. It says the District of Columbia, so that's Washington, D.C. So that Northeast region, pretty much. So basically for the year, people do not like it. Let's look at for the 5 years. So it went up, went down. Let's start narrowing down the timeline. I'd say no to this stock. I always look at the dividends. I forgot to show you that. I think I was so disinterested with this stock when I saw the chart that it just kind of made me want to like not even look at it so much. I think, to be honest, it's not all that. So yeah, I'd say no. You can find better stocks than this. So TFSL, I'm going to say no to this stock. I need to start labeling my stocks. So I say no to that one. So let's go to the next one. Let's see what we have. PBHC. So the 1 year, that looks nice. The volume is awful. And mind you, the markets are open as of right now. It looks nice. The earnings, it looks like a nice stock and a nice chart. Very, very slow gains. These are like turtle gains. I've never seen such slow growth for any given stock. But they seem to be doing something right. And for some reason, there's just only very few people just interested in this stock. I see no volume whatsoever on this stock. Excuse me. So we have here net income of about 7 mil. Debt is at 92. Is my volume all the way up? Now it is. I'm gonna say no to this stock. People are just not appreciating it, I guess, or they don't like it for some reason. Next stock I'm going to say no to that one. It's just, there's not a lot of interest in it. Like, nobody's buying it. There's probably only a few people that are buying it. It's just another stock. The volume, I mean, and I could be wrong too. Maybe people are just not buying that stock today or at the moment, maybe because of certain sectors that are popular within the hour or something. But I mean, I can always check back another day, but usually on any given day, volumes are just pretty high during market hours. So we have here, I see a split here. I see a split. This was in January of this year, MBIN. I would think, well, to begin with, the stock was, it's still at a low price. I think, close to $30 when they had the split. Let me look into it again. So that's the 5-year. That's the 1 year. Looks pretty flat. The 3-month looks pretty bad. Looks like a down month. It looks like a downtrend, definitely. But as we can see here, another stock, very low volume. I don't like it. I don't like it. They have really good numbers. Really good numbers. Nice earnings. Very, very, very low turnover. Very undervalued. Small market cap. They look like they can grow. If we look at this 52-week high and low, so we're looking at about an $11 difference throughout the year. That's about a little bit less than $1 a month. But again, that split just ruined it. That split ruined it. And also, let's see, support and resistance. So yeah, looking at about 26.65 if you were to draw it right in the middle. So we have here, what else? Let's look at the dividends. They cut the dividend. They cut the dividend. 2 cents. Wow. Yeah, no wonder the stock is going down because they cut the dividend. That's one of the investing rules that I wouldn't say not everybody uses, but I use it. If a dividend starts cutting, even if it's by a penny, then you know something's wrong. Something is just totally wrong. Because it's like you're losing money. You're not gaining overall. Yeah, you might gain on capital appreciation, but then that already triggers like a bad thing. Like, okay, why are they cutting? If you question that, that's just common sense. Like, okay, now they're trying to figure out their balance sheet or their expenses or their money habits, and it's just not a good sign. So once you see a dividend cut, I usually get rid of it and find something else. So I think that's why the chart looks that way. And then the split doesn't help either. So even in January 18, 2022, even if you saw that and you decide to buy after the split, even if it went down and you bought it here and it went up again, something should tell you right around. So this was like January 28th. That was the lowest for that month. If it went lower, then the end of that month gain or loss or whatever, if it went lower than that for the month, then you can see about here it actually dropped. And this was around February 23rd. It dropped below the month loss. So yeah, that was a clear sign. That should tell you that it's time to get out. And then as you can see here, it's just dropping even more. Even though it's kind of zigzagging, but the downtrend, that's what it looks like. It's gonna continue. So it sucks. It sucks. It looks like an okay company, but again, it's like wrong place at the wrong time. The split ruined it. The dividend cut ruined it. The downtrend ruined it. It's just this stock got caught in the bad place at a bad time, as I like to say. So I'm gonna say no. But again, who knows in the future if it might rebound. Um, but yeah, it's just not doing so good. It had potential. It looked like it had potential, but I guess not. So we have here next is RBB. So this is at $24.57. Volume is still pretty low, but let's look at the numbers. They have some nice looking numbers. Undervalued at the moment, so that tells me the price is under the fair value. So it's pretty cheap to its normal state. Let's look at the dividends. So it's going up. That's not bad. Any splits? That's good. No splits. Let's look at some financials real quick. No, I don't want to see quarter to quarter. I want to see the annual. And again, 2020. I don't want to see 2020. I want to see 2021 results, which they're not giving me. I mean, we're already in mid-March, so I would expect a lot of these companies by the end of this month, they should have their 2021 numbers. I mean, it's okay to see last year's, but again, once we start the year, especially by the third month, you kind of want to have 2021 results already. You know, you're already kind of getting late in the game. I know people are still reporting, but you know, it's just you I don't know, it feels like you're losing time on the reports because it's like so many people and companies are going up and down within that time, and you're still trying to see if it's a good company or not, and you don't even have like up to date information. Yeah, it's accurate, but again, I want to have up to date information. And I say that in my description when people view my channel. I want to have like accurate information, check, but then the real time, like I want up to date information. So it's just not as accurate as I want to be based on what I have. So I'd rather just go with the safe bet and say no to this stock. But again, who knows if later on, maybe throughout the year, end of the year, if they might even do better. But again, the reason I'm saying no also is because I'm sure they're in a downtrend. A lot of stocks are in a downtrend, so it's kind of hard to find what people like and what people don't like. That's an idea and strategy that also, and it's just common sense. People have to think that when you like a stock, that's fine, but you need to make sure that it's making money. It's a sad reality, but that's just the truth because a trend and popularity and a liking can only last so long in the stock market. Remember, you're not putting your feelings into a stock. This is not like, it's not like you're dating a stock or this is not like sports or anything. It's not like you're choosing your favorite team and you're putting your pride and ego into it because you feel like you have a comparison with that stock. No, no, no. You do not do that when you invest. Or, well, let me say this. When you invest, yes. The reason I say yes is because investing, when I think of investing, is for the long term. You want this to be years and years and years. If you're trading, then no, you don't want to really put your heart and soul into this. So again, as you can see, major downtrend. Yes, it's gone up, but then it's starting to slowly go down. It's starting to slowly go down. I don't know if you guys see that downward action, but let me paint that picture. So let's start from the beginning of February. I wish I had the 3 months there. So as we can see here, it slowly went down, then it went down again. Yes, it's gone up, but for the most part, it still continues that downtrend. So it's like you're filling in. It's like you're filling in this blank. Hold on. Come on, write, you pen. It's like you're filling in that blank, you know? It's like you're filling that in. So once you fill that in, you can still see and continue the downtrend. So I know it's hard to see those up and downs, but again, you can clearly see it. You can clearly see it for the last 3 months. So again, what I'm trying to say is not a lot of people like this stock. And what I mean by it is that, I mean, people with deep pockets, like institutions, even the insiders, which is the CEOs and the officers and everybody in it, other major firms, even banking firms, investment firms. So yeah, it's just like the people with a lot of money, pretty much. They don't have a strong liking towards this stock, and maybe not at the moment. So that's why I'm saying no. Let's move on to the next one, NWBI. So we can see here, whoa, that's really choppy. Looks flat. $14.04. Earnings per share, not bad. Dividend, we'll look at that in a minute. Let's look at the analysis if they have one. Still looks flat to me. Any 2021 estimates? Okay, so let's look at the rising dividends. Okay, every year, no splits. I'm gonna say this, and a nice volume. I'm gonna say watch list. This definitely deserves a watch list based on the numbers that I'm seeing. Definitely a watch list. Next up, and I mean for the year, short term or long term, definitely a watch list. NWBI. Next up I have is FFIC. I'm trying to see where I started. I'm just trying to see where I started, but I'll come back to that. So next up, FFIC. So as you can see here, 18,000 for the volume. Nice looking numbers. Not huge growth, not even for the year. It's pretty flat. I don't know if it deserves a watch list. Maybe, maybe not. I know it's cheap. People like cheap stuff, but again, I'm doing this for you guys, not for me, because I don't really like super cheap stocks to invest in the long term. I don't mind them for the short term, for day trading or swing trading. But again, that's just me. That's just my liking. That's my preference. So we have here nice Net income, they're growing their income. Typically, you want to see a revenue grow. 91.5% on debt. Where do they do business? I'm trying to skim through this. U.S. government securities. It doesn't say where. I wish it did, but it doesn't. They've been around since 1994. I'm gonna give it a watch list. I'm gonna give that stock a watch list. FFIC. Next up, WAFD Washington Fed. I do not like that name. It sounds like the Washington Federal Bank, Washington D.C. Volume looks okay. Capital appreciation, not crazy about it. Let's look at the 3-month real quick. Looks like it's still holding up. Let's look at the analysis for support and resistance. Looks flat. Starting to look flat. Now let's see, where are they doing business? So do we have 2021? Why don't I have anything for 2021? Oh, whoops, 2022. Sorry. I thought it said 2021. That was my mistake. I was wondering, I'm like, why is everything blank? So revenue's gone up. We have net income about the same. ROA, EPS. When I look at financial details, it's because and I usually don't do this, and it's because I need to dig in a little deeper real quick to see what's going on a little bit more, to get more of an idea. What's their debt? That's very important. So the debt is the same. When did they increase it? So from 2018 to 19, not a big difference. From 2019 to 2020, that's a little difference. Net income. So then we have revenue, operating income. Nothing. Oh boy. What am I gonna do? I have no operating income. Maybe it'll show it there. It does tell me there. Investing 579, 314. So we're looking at about 250, 260. So they do have enough cash, more than enough cash. Their earnings are growing. What was their 52-week high and low? 38 high, 29 low. Let me look at the chart again. Flat. I'm going to say watch list. This bank is tricky. Very, very tricky. I mean, everything seems flat. They seem like they have enough cash. They seem decent. But then I'm just trying to figure out what their debt is like. So that's gone up. No splits. Then why is their debt in the 90s? I mean, if they're doing okay compared to other stocks, because usually they're in the high 80s, I don't know why they're in the 90s. That's what I don't get. I mean, Yeah, it's not a big difference. Yeah, 3% and change or whatever on difference of debt. But then percentage wise, it don't mean much. But when you actually look at the numbers, like how much money, that can make a big difference. So I'm just trying to figure out. Let me dig a little bit deeper again for this stock. Um, Financials. Where is where is okay, I got 2021. Let me look at their income statement. Where is it where it's negative? Where are the negative numbers? Income statement, balance sheet. Fixed assets net. That's not even a lot. Has to be a number. Intangible assets. Maybe so. What I'm gathering here, it shows maybe their expenses have gone up a little bit. Maybe intangible assets as well. Non-current liabilities, other non-current. Oh, maybe the taxes too. Maybe they're paying a little bit more on taxes. Finance activities, net increase in cash. Hold up, maybe they had to. Oh, some kind of financing deal where they paid it in cash and the transaction. Maybe it was because of that. So maybe it was their taxes, some kind of payment. It was either the taxes or some kind of payment that they had to do. Could be an expense. And that's it. That's all I gathered from it. So I'd say watch list. I'd say watch list. This was a tough company actually. I don't usually don't stay that long reviewing a company, but this was kind of tough. And then also past 5 days it's been going up, but again, that might change in the blink of an eye. So for now, and I'd say probably towards the end of the month it looks like a good stock. But don't keep your hopes up for this stock. I'd say watch list it until further notice. So next up I have is HTLFP Heartland Financial. Let's look at the 1 year downtrend. I'm not surprised. Earnings per share really nice. Nice dividend yield. Deserves a watch list for now. Yeah, definitely a watch list. It hasn't really gotten that low. They're still pretty good. They're still earning money. They're still gaining money. Looks like they're breaking out, actually. If they have an increase in dividend, yeah, I would definitely hang on to this stock. Yep. They just started paying a dividend in 2020. I'd definitely watch list this stock. I like this stock. Again, I don't have any price ranges. I can't give you that, but I like this stock. This stock is definitely up and coming. This is a stock I could see that's gonna grow pretty fast. Pretty fast. They're managing money good and they're undervalued. And what I like about it is that even though they're cheap, they're not that cheap. They're not like a $2, $3 stock. Yeah, they have a lot of choppiness, but we can see here they're in a downtrend as of now. And again, yes, it's a lot of choppiness because people are trying to find the right price for it. It just, all it needs is just more interest in it. It just needs more people interested in this stock, but this can definitely break out. I can see people liking this stock once they find out this stock is pretty decent and pretty cheap as of right now. But again, not enough volume, but definitely watch list that stock. Next up is ENVA, ENVA. Downtrend, nice volume, looks like a growth stock. They don't pay any dividends. A lot of these banks are looking undervalued. But again, the banking sector is, the banking sector is like pretty large, and there's just, again, so many companies to look at. So we have here 2021 and 2020. So their earnings went lower, but still strong. Their debt is pretty low. Wow, look how low that is. This is definitely a stock you want to get your hands on and own, especially with that low of a debt. These guys know what they're doing. Definitely. So let's see where they do business. Oh, consumer lending. Oh my gosh. I'm thinking this is a bank stock. I guess my research got confused with the banking services, and they used that as a secondary sector, but that's not the main sector. The main sector I have it is under consumer lending. So I apologize for that. I haven't reviewed that sector yet because again I need to finish the banking sector and then do it in alphabetical order. You know, B comes before C, so banking and then consumer lending. But that's a short list, a very short list. This list is pretty large. So they do business in the U.S. Okay, 39 states and Brazil. Washington, D.C. as well. So they do installment loans include longer term loans that require outstanding principal. So basically, it's like they loan people money. Obviously they loan money, but I mean, it's more in the sense of housing is what I'm gathering reading this. And then also like it sounds like school loans or something like that. It says technology and analytics. Small businesses. Not school loans, it's like small businesses cuz it says what I saw here it said single payment loans. And then it said like multiple installments, principal balance. I'm like, that sounds like a school loan. Or like, I don't even know how to describe it. It's almost like a loan you know you can't afford. It's almost like an unexpected loan. Because like it's like they want you to pay like now, and I know how loans work. I'm sure everybody does, but with these key words here, I'm seeing multiple installments. Then I see outstanding principal balance. That's something that creditors use. And those types of people, those are people that like always call you constantly on the phone and always bugging you like, "Hey, when are you gonna make the next payment?" And then they're just very annoying, and they just want you to like pay now, you know. And it's like, yeah, we owe you the money, but people, they just don't care. They just don't want to understand other people's financial situations, and it's like pay me and screw you, and it's just bad business basically. But I can tell by reading those words, it's like they want like a constant overpayment, you know. When I hate seeing that. Like, oh yeah, we want multiple installments. It's like you get paid when you get paid, you know. Um, so now reading that, it seems like a good stock, but that tricky business, the way they worded that, I don't know. Um, this is a really tricky one. Um, let's see the 1 year. I'm gonna say watch list for now. I mean, the debt is really low. I'm gonna say watch list for now. But from experience, just by reading those words, it's like how like if you agree to a monthly payment, right? It's like you're gonna pay one time a month. You're not gonna pay several times a month. That just doesn't work. People have like financial obligations. So when they say that, like I hear that and I dislike that like so much. Like you want multiple installment and it's like, okay, then that's telling me that you want to get paid several times a month. And it's like that doesn't work that way. People only can pay what they can pay. So next up is SPFI. I don't even know if I reviewed this company. I think I did. I don't know if this was the first one. Let's jump right to the dividends. So they have growing dividends. Oh, that's good. Let me look at the chart again for the 3 month. They look like they're holding up. I'd say they deserve a watch list. It's just that volume. A lot of these banks, look at that volume. Yeah, they deserve a watch list for the time being. I say, and also when you watch this company, I failed to mention that. Again, I apologize. Um, the time frame for a watch list is usually up to 3 months. After 3 months, you really don't want to go beyond that. I mean, quarter to quarter, companies start reporting, things change, and that's basically your deadline every 3 months. Every 3 months. So it doesn't matter which month. It's not like I'm saying you have to start here in March, but generally, um, on any given day or week or whatever, you just want to start from where you start at once you look at the stock and look at it and hold on to it and watch list it for like 3 months. If not, then nothing happens and nothing happens. Um, if you miss out on the opportunity, after I stop watch listing it, it's all of a sudden it goes up. Then it's fine. There's always stocks that go up and down, so you can't catch every move you want to. So that's the whole point of investing. You just want to do it for the long run. If you do it for the short term, then that's a whole different ball game. I do that too, but again, it just takes planning and coordination and patience to do all this. So let's see. It looks like it's breaking out from the Webull estimates. Let's look at the company real quick. Let me see. What? Any location? Okay, so financial services to small and medium-sized business companies. It doesn't say where. Includes commercial and retail banking. Okay. Over 13 loan production offices. So they do mortgage loan. That's not bad. $52-week high and low of $9. That's not a lot. Let me look at the financials. Whoops, sorry. Let me look at the financials again for 2021. It's gone up. I'd give it a watch list. So I think I started TFSL. I can't even remember. I've been talking for so long. So I did 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Let me just look at TFSL and PBHC real quick. So I did do this company. So definitely TFSL can be a watch list. They're raising dividends, but like every other year. We have, come on, 2021. The debt is typically lower than other companies. Yeah, I definitely see watch list. Definitely watch list this company. TFSL, then PBHC. I think I said no to this one. The volume was pretty low. But oh yeah, I did review it. They just need volume, so yeah. That's all they needed. So I'd say watch listed since they're on an uptrend. So yeah. So that's it. I know this video is long. Thank you guys for watching. I'll see you guys in the next one.